Okay, we're on Friday the 12th of August. I'm going to continue on with the new feature that I've started doing on the channel, whereby we look at either a Forex pair or an index on the higher time frame. I show you how to analyze the market, what the market has been telling us, and then I show you potential areas to watch for future trades and explain the reasons why. So today we're going to do the Euro US dollar. First thing we're going to do is we're going to just start from, let me have a look, all the way back here in 2014, because quite simply, it's very easy to see what's the market been doing since then. It's been in a very, very strong downtrend. Very common indicator to determine trend is the MA200, simple moving average, 200 period. It's not only used by retail traders, it's used by professional traders, it's used by hedge funds, it's used by banks. If you watch Bloomberg, you'll see when they're analyzing a market, they will always refer to the MA200 when they are talking about a trend. So what we can see is this trend came all the way down into March 2015. We then created a double bottom right here. Just going to mark it in for you. And this is when the market pushed back up again after that double bottom. If you watch the video I've done on how to trade double bottoms and double tops, it's exactly what we've experienced right here. We've pushed back up. The market has gone sideways. It's gone above the MA200, below, above, below, above, below, and currently we are just sitting above. So what is this telling us? Well, we've come from a very strong downtrend, and now the market is ranging. Ranging markets can be determined by sideways action like this. One of the easy ways to see it is it's jumping above, below the MA200. The MA200 is flattening out, and the market is not really gone anywhere. All it simply means is for the last little while, since February 2015, all the way up until today, the market has found comfortable price levels. You know, that's basically where investors are finding value. That's where the market is bouncing between as it moves along. So going into this market now, I always see so-called trading experts, trading gurus saying you have to trade with the trend, you have to trade the trend. For me, it's absolute rubbish. You can make money in markets that are going sideways just as easy as you can in markets that are ranging. If your trading plan is only available to you when a market is doing a certain thing, so if it's ranging or if it's trending, if that's the only times you're able to trade, you should look at either having an alternative trading method, also trading plan, or adapt your plan to incorporate when markets are either ranging or trending, depending on what you currently trade. So let's have a quick look. Okay, so the market really, we're in August, you've got to remember the market is slightly quieter currently. A lot of traders are on holiday. The key thing is we are just doing what we've been doing for the last couple of years. We're just moving sideways. First thing we want to look at, for me, well, I can see straight away, let me just grab this right here. If we take this, go up like this, we can see the market has touched here, 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 and here. So the market has been respecting a trend line. You could also say this has been somewhat of a triangle and a price squeeze. Right here, you can see the market's climbed up like this. It's made a false break to the upside. It's came down, bounced again, fallen through, came back up. we've had a retest here, and we're pushing back up again. So potential area to watch for trades, first of all, is anywhere along this trend line. If we come back up again, retest this area, and you start to see the good reactions, the price actions, things that fit in with whatever trading plan you're using, then it's potential for a short. Just looking at this on the 4-hour time frame, you could almost move this up slightly so it's lining up with here. And if that's the case, we haven't quite made a retest yet, and we are looking for the retest to come in still, which would be a slightly more positive confluence if we did see the first reaction when the market got up there. Now, I must mention, currently I don't swing trade. It's something that I am looking at. You know, I know how to analyze markets very well. I used to swing trade, but currently I only trade the 5-minute time frame. However, swing trading is something that I am in the process of getting back into. It takes me a good number of months before I am comfortable with the methods that I use. I like to refine them. I like to extensively test them. I certainly won't release them to people unless I am 100% satisfied with them and willing to trade them myself. This is the exact sort of thing I've been looking for, the retest on this area right here. If not, where else do we want to look? This area right here. Great area to look for shorts. Also up here. Great area to look for shorts. And then if you were going long, remember this market is in a range. Where are we going to look? We're going to look at the previous extremes. And then we're going to zoom in a little bit. We're going to mark in these zones. This really is one large zone, to be honest. When you're looking at it right here. And for short positions, if you were in short positions or long positions, to be honest, where's your management point going to be? Where are you going to watch to see if the trade is going to continue ranging between this large upper and lower zone, or if it's going to just begin bouncing off the middle? Or you can see where all the reactions have been coming. Right here, right here, here. You can see the market chopping in here, all along here. What you can actually see is right here. On the 31st of July, the market has ramped up, tried to make a break, and then it has collapsed back down and closed below this line of support and resistance. It's giving you a little clue, and in fact, if you come across here, what can we see? This is currently where the market is bouncing off of. Areas like this, the reason you want to have them marked in is because let's say we are in a long position from here, the market gets up to here, but all we've done is we've marked in these key areas here and here. We're waiting for this trade to come up to here, but in actual fact we get our reactions here, and we end up getting stopped out at break even, or we let it come against us for a loss. And the exact same from up here, guys. If you're in a short, you want to be watching here for your reactions. So that is basically the analysis of the euro US dollar. Hopefully it was helpful. You can basically see the market has been ranging. You can see the price is squeezed and it's now come out of the squeeze. It's bouncing off of this area of support and resistance right now. But reactions from here certainly would be nice for a short position, either back down into this management point or with the potential for breaking through. The great thing with swing trading is if it does get down here, you can close out partial profits, bring your stop to break even, and then just let this run and see if it breaks through or not. It's a great way to extend your profitability, letting profits run. Okay, so hopefully it was helpful, guys. I'll be back in either a week or 2 weeks with another Forex pair doing the exact same thing, taking you through how to analyze it, what it's been showing you, and the potential areas to watch for future trades.